Hey traders, let's take a moment to thank and feature one of our top sponsors, FX2 Funding. If you're looking to get funded, listen up. FX2 is offering traders the chance to trade with up to $200,000 in simulated capital and receive up to 85% of their results. If you're interested in getting started, use the link being dropped in the chat or the link down in the description below. If you pass the evaluation, you'll receive your fee back and gain access to your new account. FX2 allows traders access to a wide range of assets and allows traders to hold their trades over the weekend. FX2 is giving A1 Trading Show fans 15% off the evaluation fee if you use promo code A1Trading15. So if you'd like to learn more, again, use the link being dropped in the chat or the link down in the description below and use code A1Trading15 at checkout for a discount on any of their evaluations. Now back to the show.
Good morning, everybody, and welcome back to another live stream. We are here for, of course, probably the biggest stream of the month. We, of course, have been looking forward to this number for some time. And this is, of course, the commitment of trade. I'm sorry, not the commitment of traders, the CPI, right? The Consumer Price Index, which comes out here in just over 10 minutes. We're narrowing in on the number here. And what we're expecting here is volatility regardless of what happens. There are some people who think inflation is going to continue its disinflation trend, meaning continue to cool. And there are other people who think that there is perhaps more inflationary pressures that will persist. The US economy has been relatively strong, and that leads to a stubborn inflationary pushback. Basically, the idea is that if the economy is strong, it's generally going to be inflationary because more hiring is going on, more spending is occurring, that sort of thing. And the economy, like I said, has been relatively strong despite all of the interest rate hikes that we've seen in the last 2 years. Anyways, what we're going to do in this stream here is before the news, we're going to take a look at several charts together. I have my eye personally on the indices here today. We'll also be looking at gold. We'll look at the dollar. We'll look at some currency pairs, indices, commodities. There is a lot for us to look at. So let's first take a look at gold. Now, I just want to preface what I'm about to say with I am a trader, not a fortune teller. A lot of times people jump onto streams like this and they say, Nick, what's gold going to do? Is it going to spike up or it's going to spike down? I am not a wizard and I'm not a gambler either, right? When it comes to trading, if you really, we don't know what the numbers are going to be. All we can do is we can react accordingly and risk properly. So I put in a little note here, this little stanza right here. If we get really, really cool inflationary numbers, I'm not going to short gold. In fact, it might actually start to flip bullish. But if we see a hotter than expected CPI number, which could perhaps suggest more dollar strength as interest rate projections will extend further out into the future, meaning higher rates for longer, if that is a persistent theme due to hotter than expected inflation, it's likely that a poke up here on the gold market, I would actually be looking for shorts. However, if the inflationary number, meaning CPI, comes out cooler than expected, I'm probably not going to jump into a short on gold. I've been watching gold for the last 24 hours. I don't have any trades on it, but it is something I've been watching for a possible short setup. Now, again, if we look at purely a technical move here, we've had a nice run off of the bottoms. There's been some, of course, some global tension causing some of that, as you guys are more than likely aware. The Israel situation right now has caused a little bit of boost in risk off sentiment. We saw treasuries get a bid. We saw gold as well get a little bit of a bid there. So as we rally, however, my opinion is that gold looks like it should have some rejection up in this area, assuming we don't get cooler inflation numbers. Again, I don't want to just say, oh yeah, it's going to definitely sell off in this area. If we get cool inflationary numbers, this number means nothing. This is why technical traders who do not consider fundamentals have to be careful, because if this cooling number comes out, then this level almost immediately becomes a possible area of support for a continued rally. So I'm watching gold closely, and that's my personal setup for gold, is watching to see what the numbers do, and then I'm going to react accordingly. Let's take a look at the S&P 500, which has had an impressive move here. And I thought that perhaps cooling inflationary numbers could do something similar to the S&P 500. I put this little note on my chart. I said, will CPI cause a breakout? Well, that was over here. And now we've already seen what seems to be a mild break above this level of resistance. Looking left on the daily, you can see there's a big level of resistance here. Well, we haven't even had the number, and the S&P 500 is very optimistic going into this number. So that in mind, I want to add something. If we do get hotter than expected CPI numbers, it's possible that this thing has a really rough day. And again, I'm not here to forecast what the news is going to be, but there are plenty of setups following the number that I will be looking at. I'm interested in possibly tipping the scale on the bullish side for the S&P 500 if we can, in fact, see cooling inflationary numbers. But it all comes down to what we get. And noticeably, it is all about, for me, the big one is the core CPI. Headline inflation is expected to come down by a little bit, but where we're expected to get some really good improvement here in the inflation story today is, of course, on the core number. We're 8 minutes out. You can see the timer has officially started before we get this number. And again, let me just make a quick warning. Please do not gamble on this news event. Many traders are going to lose a lot of money today doing that. Don't gamble on CPI. Nobody knows what the number is going to be with certainty. You may have your biases. I've mentioned that my bias is I think we could get some cooling numbers. I think 3.6% or lower is possible, but a surprise there shouldn't break my entire trading account, right? I'm not gambling on the news. I have a bias, which is loose, but I'm going to let the numbers confirm. I'm going to trade accordingly. So I'm watching the S&P 500. I'm watching the gold market. For dollar traders out there, if we get something that is really hot for the US dollar, you could possibly see some of these levels of resistance break out. If you're a dollar yen bull, here's something to consider. You have this level here looking left, right around that 149.42. If this level is able to get broken out, you may see a nice push to the upside. So we have scenarios on both ends. I'll probably be looking to be bullish dollar yen if we get hotter than expected CPI, both headline and core numbers here this morning. So that's something I'm watching out for. And again, on both scenarios, I have some possible trade ideas that I'll be watching out for. And if I take any trades today, just a heads up, we will be sharing them inside of the Discord channel. If you're not already inside of the Discord channel, here's what you can do real quick. We'll drop the free Discord channel in here. By the way, one person who joins this month is getting a free gold membership with us. So if you'd like a free gold membership, enter for a chance to win just by joining the Discord. It's right here. So click this link. It'll take you to the free Discord. You can sign up and join us there. And yeah, do you live trade on stream or just analysis? I do both. If I take a trade or if I'm in a trade, I always talk about it on stream. I don't have anything right now on the short-term momentum side. I do, transparently, guys, I have options trades open on the Dow. I'm bullish on the Dow, and I'm bullish on the S&P 500 and the Russell 2000. All three of those, I have options trades going on with a bullish bias in mind. So those are current trades that I have running, and yeah. Let's take a quick look at oil. Oil caught a little bit of a bounce following this gap being filled. Look at how perfectly gap filled and then found some support. This will be interesting today, by the way, in terms of inflationary pressures. You've got oil you could even mark up on your charts. Let's take a quick look at the euro. The euro sitting at resistance, but trying actually, completely honestly, this is actually a pretty impressive break to the upside here ahead of CPI numbers. If we do get cooling numbers, like I said, you could probably expect the euro to extend those gains, in my opinion. If we get cooling numbers, this level becomes probably an area of value for bullish setups. So we'll watch out for that going forward. Quick look at the pound USD breaking out of resistance here this morning. I'm sorry, not this morning, over the last few days. And again, same principle applies. If you get cooling numbers, it likely could act to be kind of a new floor for the pound dollar in the coming days and weeks. So setups there. Nick, I'm going to try and short the market for gold. Do you think it'll go short? Dimitri, thank you for the question. And here's my concept. I mentioned this earlier. I am interested in gold shorts, but very much depends on what the CPI number comes out to be, because it changes the narrative dramatically. That's why the market will spike so much. If you're a purely technical trader, here's something to think about. The market doesn't spike purely on technicals. It spikes heavily on news. Why news? Because fundamentals matter. They're what really drive the markets. And so when it comes to this CPI figure coming out, it's going to give us insight as to whether or not the inflationary story is going to continue and be this long, epic poem, or if it's going to kind of start to ease and continue to go in that direction. I mean, we've had some real progress. We were at one point in the US, we saw inflation up towards 9%, and now we're starting to see inflation come down. Today, it is time for numbers to prove themselves. Are we going to continue that disinflation story? And if so, gold could actually turn bullish. But if that number stays hot, which would cause the dollar to spike in strength, we could very well see the gold market continue to roll back over. And in my opinion, if we get a really hot CPI number, dollar yen bullish setups and gold bearish setups would be kind of the narrative for me, looking for a return to the high on dollar yen and the low on gold respectively, being back to this 1819.6 if we were to in fact get again a hot CPI number. So my bias for the coming days is very much dependent on what we are about to get from the numbers. So we'll keep an eye on that. Again, so I have that if CPI is hot. I'm not just going to short gold. So if CPI numbers come out really, really hot, I'm sorry, very cool, right? Inflationary progress has been made, then I'm not going to short gold. So it's very fundamental here for me today, and it's pretty binary based on the CPI numbers. Finally, a live channel answers questions. I do my best, Dimitri, but I can't claim that I'm the best at that. I get a lot of questions each day and I miss a lot of questions, but I appreciate your question. And I appreciate everybody who asks good, insightful questions. I just, if I don't get to you, I do try and respond to as many comments as I can as well. So you can always leave me a comment. Is big move selling? Again, we don't forecast ahead of the news here. That is really, really risky to do because none of us know what the numbers are going to be. It is expected to be very volatile. We just don't know which direction because we don't know how the CPI number is going to print. Again, we are expecting here today, guys, we've got 2 minutes to go. We're expecting 3.6 on the headline. I think it's 4.1 year over year on core is what we're expected to get down to. But the month over month variation is, of course, 0.3%. So we'll watch this very closely as we come into the number. And like I said, I've laid out my game plan here. If the dollar is strong due to hot inflationary numbers, I'll probably be looking for dollar yen setups as well as gold shorts. And if the setup flips, if we get cooling inflationary numbers, then it's going to be great for my options trades. I am bullish indices right now, so that would be great. And dollar bearish setups could come into play. So I really like the idea of the indices on the long side and adding to my trades that I already have if the inflationary number comes out cool. So I've got a game plan for you guys. There's 860 of you guys. If you could do me a quick favor while I load up my charts for this, if you could just hit that thumbs up button on the stream, it really would help out what we're trying to do here, trying to grow a bigger audience in the trading space for people who are very serious about this and who would like free value on a daily stream. So please hit that thumbs up button and consider subscribing if you're new. We've got the euro in the bottom left. We've got gold top left. S&P 500 is going to sit snug in the top right. Got the, let's see, gold, euro, S&P, and yeah, that'll do, guys. We're coming into the number here about 35 seconds away. And again, just it's free, takes half a second. Hit that thumbs up on the stream. It really helps us out. We'll get the numbers here in just a second. We'll be covering it. Don't go anywhere after the spike, by the way, guys, because that's where we can actually look for setups. A lot of times, people leave right after the spike comes. Stick around. The setups follow the spike. It's not the other way around like most traders kind of gamble the news. Anyways, breaking news coming in. All right, let's see what we get again for CPI numbers coming in hot. All right, the S&P 500 initially down. That would signal perhaps some hot inflationary numbers. Let's make sure we don't call it too soon. There's the euro coming down. Gold shot down initially. The S&P 500 made a swift move lower and seems to be bouncing so far. Let's see if we can get the numbers coming in. We got 0.4%. Ooh, hotter than expected inflationary numbers remained unchanged from the previous go around. So missing expectations by a little bit, coming up to 3.7. Unemployment claims pretty unmeaningful there. What was core CPI year over year? Someone in the chat, if you have core CPI year over year for me, you guys know who you are. If you have that, let me know. But it does seem like we have unchanged inflation, not severe progress like many traders and investors were hoping for. S&P 500 pulling back, but this is, how do we spin this? Is this super dollar bullish? Well, it's not an incredibly hot trend. It seems that we did make some strides. Or core didn't tick up. That's probably at least good. We were expecting core to stay at 0.3%, which on an annualized basis is in some ways cooling. But headline CPI come up a little bit. I wonder if that does have to do with the elevated energy prices that we saw in the last couple months. Dollar index, again, ticking higher, 105.53 coming in hot. S&P 500 trading lower, and gold doing the same. Again, gold has just crossed up above this 50% level. And with this rejection, again, I have to see 3.7 year over year. Thank you guys. Well, 3.7 is year over year for headline. For core, we have 4.1. Is that right, Ari? If somebody could confirm that for me, that would be much appreciated, but I believe that is correct. Gold, again, still bearish bias. S&P 500 still bearish bias on the EDGEFINDER, so we're getting that reading. And again, very bearish reading on gold still seems to persist. With this inflationary number, let me see for a second what that's going to do to my bias on gold. Again, I mentioned a possible short setup. So let me take a closer look at this and see if that's going to be something that we do today. Again, 50% retracement still looks decent. I marked this level and we ticked up previous or prior to inflation, and this would constitute possibly a hotter than expected CPI print, right? We did get headline tick up, so we didn't see the massive progress that we were hoping for, but again, also not necessarily just a catastrophic hot inflationary number either. So that would explain why the news spike here is not incredibly dramatic. But let's keep going. Let's take a look around the room before I take trades. I've got to confirm kind of where I'm at. This dollar index ticking up higher and finding support, it seems, off this 105.66 level. Real strong push off of that. And let's see where else things are trading at. What did that do to oil? Did that do anything to oil? Oil didn't trade too far from where it left off. S&P 500, as I mentioned, ticked lower, but not an incredibly big move on the indices. And by the way, guys, this is just simply getting back to where we closed New York session last night. So an interesting, this is not necessarily a catastrophic blow through lows at this point. And again, not necessarily an incredibly hot CPI number either. So I'm kind of calling, in terms of this number, I'm not calling it to be incredibly decisive one way or the other. Let's look at the facts. Year over year did tick up slightly higher, showing some stubborn inflationary pressures on the headline, but you can also attest some of the CPI stuff perhaps to energy prices as well. So yeah, that is an interesting. Also, there's very high expectations on the dollar right now. The dollar's been floating higher for months, and in order for it to continue to do so, the numbers have to come out real hot. So this does not necessarily just scream dollar bullishness right off the bat, but I also, again, I'm weighing the odds here. I'm not just going to jump into trades because this is not a clear, smashing, decisive move here by any means. It is strong for the dollar. EURUSD big drop. Core year over year 4.1%. Thank you for that. Let me hold on, guys. I'm going to pull up. Just want to look at some stats. I'm going to pull this up in just a second. I'm pulling up the other calendar that I use, which is my FX Books calendar. So give me just a second on that front. Let's go for CPI. CPI. Okay. So core inflation rate, month over month, inflation rate year over year, 4.3% was previous. Actual came out at 4.1. Yeah, this is tricky. Here's why, guys. Here's why I'm struggling with this. I'm not struggling with it. It's just that you can't necessarily just scream pure dollar bullishness, because look what we got on core side of things on a year by year basis. Core removes some more volatile areas of the market, like energy and food, which can be very, very volatile in prices across the board. What we have here today is we have the core inflation rate year over year coming in and actually hitting expectations. So consensus was 4.1%, a cooling in the 4.3% year over year that we got previously, come down to 4.1%. We got that on the core front. So that, I would argue, is why we're not seeing a smash to the downside on equities. Yes, you're seeing some of the indices pull back. Yes, you're seeing some pullback there because we didn't win on both fronts. We didn't win on the inflation headline year over year. We just ticked lower on core. Well, this is, again, I think that you're not necessarily, yes, there's a tick up in the dollar, but I'm not necessarily super bullish on the dollar due to this. Again, indices getting in some ways what they want. In fact, the core ticking lower does not look that bad. So this actually is in some ways reassuring. Again, I mentioned before the number. The reason I'm really debating this is as follows. I mentioned before that I have several long biased indices options trades going on. So I'll show you that where I'm currently positioned personally. I'm bullish on indices. I sold puts on the Russell. I'm long basically on the Dow Jones Industrial Average, right? The US 30. So I am bullish on indices. And so what I'm saying here is that yes, you're getting this print lower or this hot inflationary headline number, but core did what the market wanted to see. And so in some ways, yes, you're getting a bit of a pullback here, but it doesn't necessarily change my bullish outlook for indices in terms of a swing trading perspective. So yeah, you also have seasonality as O'Cole Jay just mentioned. There is perhaps some seasonality that could be suggested for indices. We've mentioned that on the show several times. We could go to seasonality and pull that up just for reference. But again, seasonality, you take a look here, you can see the S&P 500 is going into, historically speaking, some of the best time of the year, as many companies in the United States see a significant boost to revenue in the end of the year shopping sprees that do occur. In the US, we're a very consumer heavy economy. We spend a lot of money during the holidays, right? People do a lot of their shopping during that time. And so stocks oftentimes do see a little bit of boosts as earnings are, more optimistic. So anyways, in terms of indices, I'm really not necessarily convinced that I want to be short indices at all at this time. In fact, this doesn't really hinder too much my bullishness on the indices at this time. Anyways, let's go back to gold. I mentioned it. Am I going to be shorting gold here at these levels? And I'm going to be honest, no, I'm not at this level. I mentioned earlier before the stream, possibly if we do get another surge higher on gold, I'd be interested around the 61.8. But I mentioned that I would be shorting gold if CPI was really hot. We didn't get really hot. We got a slightly higher than expected headline CPI, and we got a, as expected, tick lower in core inflation. That's not screaming dollar strength to me, despite the dollar trading up a little bit off of the lows. So that's gonna keep me cautious. And again, I know that from my perspective as a content creator, it's more interesting for me to say, oh yeah, this is a screaming setup to be short or long, because it makes the stream more exciting. But at the end of the day, I do put real money on my trades, and I'm not going to force a trade just because I'm streaming. So again, at the end of the day, I've just done my analysis on inflation. It doesn't change too much my general bullish outlook on indices, and it doesn't have me screaming short setup on gold. The fundamentals here were a bit mixed. They weren't smashing one way or the other. Okay. Let's take a look at this dollar index for a second. Dollar index making a nice push to the upside, and to be fair to dollar bulls here, right? We've got a nice little push to the upside. So we've got a nice little push to the upside, right? Pushing off of these lows, breaking through highs. We'll talk more technical basis in just a few minutes. We've got We've got Miko and Marco joining us for our Technical Thursdays session. So we'll keep an eye on the technicals in just a moment. For me, like I said, current setups, I'm staying bullish indices on a kind of swing perspective. From a short-term momentum trading, I need to see a couple things change on the top setups page. In terms of top setups, this is of course our where I go to find opportunities in the market using our algorithm. Still going to be, generally speaking, more bearish on some charts like euro and pound. Let's actually take a look at the euro, see if there's any opportunities there. Yeah, I mean, that's a beautiful sell, and possibly there might be an argument here if you're sort of dollar bullish. I don't know why. I don't know how I got to change this setting. I don't know why my thing will keep drawing trend lines after I'm done with it. Anyways, again, a really nice rejection here off of this number. And in terms of trades on the dollar bullish side, I probably would be more interested, if anything, in the euro on the short side than I would even be on the gold short side. We've got really strong readings on the EDGEFINDER, so I'll keep an eye on that. I do. There are several things, guys, that I have pending trading ideas. If I do take a trade idea today, you guys will see it inside of the Discord. If you're a member with us, I share all of the trades that I'm taking. And if you would like to get access to that, I've got something pretty cool for you. Today, in celebration of the big stream, we are currently doing a 45% off discount off of our Discord VIP membership. If you guys would like 45% off, here's how you can get access to that. Click the link down below in the chat right now or in the description. It'll take you to a direct message center where you can have a conversation with someone on our staff. If you would like to get the trade alerts from Frank and myself, we share all of our entries, all of our exits, stuff that we've been trading. So I was long on dollar yen earlier this week. We took a small profit on that one. Frank has been long in the S&P 500. I've been bullish on the US 30. There's a couple different trades that we've been in recently. So if you'd like access to all of those trade alerts sent directly to your phone or to your Discord, currently they are 45% off for the CPI stream. Here's how you can get access to that super discounted rate. If you click the link that's in the chat right now, I've got 3 people in our staff in office who will be able to hook you up with a membership for that super discounted stream sale price. Just click the link that's in the chat, click chat now, and then click CPI 45% off sale. And again, that is just for the stream. So if you've been thinking about joining the Discord, get 45% off. And it's access to all the trade alerts being shared, our coaching webinars with Ivan. If you know Ivan, he jumps in there and does coaching calls with everyone. We also have a strategy library where you can download and read through all of our fundamental and technical based strategies and guides. So if any of that would be useful to you, take advantage. It's 45% off for today's stream. And again, that is in celebration of the big CPI stream. So again, 45% off, limited time. All you got to do is click that link, click chat now, and someone from our staff will hook you up with a membership to all of those trade alerts. Get that notified to your phone anytime we take trades. I'm sure it will be helpful to you because again, I'll show you just one thing too while I'm on that subject. When I take a trade or when Frank takes a trade, we don't just send like our entries and exits. We break things down from a fundamental and a technical perspective. We attach charts, we attach graphs, we attach the full logic behind our trades. So if you're somebody who's looking to learn more about how trades are taken from our strategy, if you like what you see here, if you want to learn more in depth, join us. It is a very affordable discounted rate right now for that 45% off sale. And again, you can take advantage just by messaging us in on the website. Cool. All right. So guys, that's going to pretty much wrap up what I've got on the CPI stuff, but don't go anywhere. We're bringing in Miko and Marco to go over some technical setups now that we've done a lot of the fundamental breakdowns here today. So we're going to go to Miko and Marco in just a moment, right after this quick break, thanking our sponsors. We'll be back on the charts with both of them. Coming at you soon.
Attention A1 Trading Show fans, if you're interested in getting free access to the EDGEFINDER or our premium trade alerts, listen up. For a limited time, our show's partnered broker 8cap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to 8cap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now, back to the A1 Trading Show.
All right, and we are back, guys, with Miko and Marco for Technical Thursdays. How are you guys?
Hello.
I'm good.
Good to have both you guys back on for what is turned out to be a pretty exciting day. Some dollar strength coming in off the news. I mentioned prior to you guys coming on, I was a little bit conflicted on how decisive this candle really would be. But despite my confusion, the candle seems pretty strong in terms of dollar response. I'll go to Marco, you first. What do you think? Setups, what's your chart of the day?
Sure. So let me take a quick look on my charts. What I'm seeing is, well, I'm focusing on the dollar pairs. I mean, it's looking overall on this 1 hour chart, it's looking very ascending. And what I know from my back testing, usually these large ascending structures create a nice, strong downtrend. So with this leg, I do like what I'm seeing currently, but I need to see it continue down a bit more. It's definitely a big one. It's definitely a news candle. And currently, it's printing a huge wick to a downside, which is not really a good sign. But if the next candle continues bearish, I would 100% be looking to sell on a flag or on a break and a retest. For the rest of my pairs, let me take a quick look. So we have the euro and the Japanese yen. Overall ascending as well, but not the reaction I want to be seeing. AU is range-bound. Aussie US dollar is not on my watch list. It's just kind of topping out here. It's very flat. Aussie Japanese yen. I want to see more commitment to the downside. So not really seeing much on this one. The pound, overall, very large ascending structure, same as the euro and the US dollar, but this reaction is not enough for me. So I want to see more commitment. I want to see more bearish pressure. I want to see this momentum continue down a lot more, especially on the pound. And the final one for me is the New Zealand Japanese yen, which was looking extremely ascending, very clean, very very clean in this general area. But then we started to form this flat range, which is something I do not want to be seeing. So the pattern has not fully formed, and that's why I'm leaving this pair alone. So the only one on my watch list currently is the euro and US dollar, and I want to see the next candle continue down more like this. Rest of the pairs just not looking good currently.
Sure. No, that's fair. And I think, you know, I want to add something just before I go to Miko next, because I know we're going to talk dollar pairs in this this stream a good bit, because we did get some movement there. I just wanted to say, to reiterate what I was pointing out earlier, on the simplest level, the news did come out. If you're just looking at the headline CPI, it came out hotter than expected, which would beckon you to say, oh, that's going to cause the dollar to go stronger as inflationary pressures are high. And that's going to lead the Fed to, again, raise rates. The problem is, to the dollar bulls right now, is that core, which measures some of the more key components of the economy and their prices, not just energy prices, which shoot all over the place. We've seen oil up in the last few months, for example. What's really key here is that the core number did actually, in fact, cool by what market participants were hoping for, down to that 4.1% year over year. The reason I'm bringing that up is because, you know, even though, of course, from a technical perspective, we saw an initial spike, I mentioned right away that I have my doubts on this dollar move to the upside, and I don't necessarily think this is just a big breakaway dollar index move. So far, we're starting to see that kind of materialize in the technicals. But again, that's kind of my opinion. Is I'm not super big believer in dollar bullishness just off of this news. Now, something else could change the tide a little bit, but from this purely, I think there's probably a valid point for a mixed candle here based on what we saw. Miko, again, do you see anything on the dollar side of stuff with this news that we got this morning that is triggering to you for any trades? Not triggering to you, but triggering any trades for you today?
Well, not at the moment. I am still very much a dollar bull longer term. I'm kind of following the DXY up, so I'm still anticipating a lot of these moves that we're seeing on the current dollar pair just to be retracement. So I've got Aussie dollar up here. I'm looking at that being retracement. I'm expecting price to continue to the downside. Still no setups for me at the moment. Again, I'm looking for particular patterns here, particular confluences to enter the market. So unless they present themselves, there is no trade. But in terms of my bias, I'm still very much a dollar bull, looking for pairs like Aussie dollar to continue down, EURUSD to continue down. Although this one has been slowly moving to the upside, as you mentioned here, not quite ready to short yet, but still rejecting a pretty big level on the daily chart, which I've noticed. So I'm wondering maybe if this will send the market down. At the moment, I'm still kind of patiently waiting for opportunities. Pound USD likewise as well. We've come back to test a nice low here on the left. We've just had a nice reaction from. So again, these are signs that potentially dollar might be looking to gain strength and potentially reverse. Still a little bit too early to say, but it's a nice reaction, of course. The news has definitely played a big part in that. Dollar CAD, I'm still looking for upside as well, but this one not quite in my area of interest just yet. I'm looking for some buys around 1.354. So I'm actually hoping maybe dollar CAD might head to the downside a little bit deeper. And I actually quite like gold and silver as well to the downside. Silver not quite in my area just yet. I'm looking at a break and retest of this level here. I do like the lower highs price has been printing, so I'm hoping a bit more upsides to get some shorts. But not long ago we had such a big breakout of silver, clearing out some lows here. So I'm seeing if silver can continue that path back down to the low here. Kind of likewise with gold, although gold's kind of already hit a big level of support and kind of reacted with that. But likewise, gold is coming to retest some key areas around here. So I'm anticipating potentially some downside for both gold and silver as well. So I'm looking for some shorts for them. It's still a little bit premature at the moment, nothing quite set up for a trade. But in terms of my bias and what I'm expecting, it's kind of all there. So I'm just waiting for opportunities to trade them. But yeah, I'm still a dollar bull, and those are some of the pairs that I'm looking at going forward.
I think that's fair points on the gold side of things. Same thing with silver. There was kind of a part of me that was looking at the gold market this morning. My game plan going into CPI was, if CPI was just a smashing hot number for today's number. Now we got mixed, like I mentioned before. We got kind of some good, some not so good in terms of inflationary numbers. If we had seen just a smash hit win for the dollar, meaning core and headline were hotter than expected, I probably would have just shorted gold outright. We had some levels at the 50% retracement that I kind of liked. But now, to kind of go along with what you're saying there, Miko, I do like gold on the short side. But now I'm going to be more picky with my entry and probably look for that 61.8 to be my level of resistance that I'd be interested in, rather than just where I was pretty willing to step up and short it based on the CPI numbers. So anyways, that, again, really hot topic in the chat today. A lot of people curious about gold. I want to ask Marco. I mentioned another one I'm watching is the dollar yen. And dollar yen, you got to be careful. There's a big disclaimer with dollar yen and anything yen related at this time due to the Bank of Japan's intervention stuff. At any point, we could hear something from Ueda, which is the Bank of Japan governor, right? The person there. If there's any further development there, it could cause some serious unknown direction volatility on the yen. But I really like the technical chart here. And I'm kind of watching this level here as we trade right around 149.44 to see if we can get that break. What do you think, Marco? Dollar yen, is there a possible break and run back to the highs that could be played here at some point?
So let me quickly open it up. USD JPY. Okay, so for me, for the strategy that I trade, currently price is stuck inside of this larger range. So I needed to break this level or this level. But if I was looking at it more on a, let's say, lower scale, again, for me, it's looking flat, to be honest. So as a trend trader, I'm not really seeing much potential right here. I mean, it's looking like possible opportunity to sell the top and buy the bottom. But personally, I could not tell you much more than that on this 1 hour chart. So what I would wait for is the break of the higher and the low, and I would expect some large reactions in these general areas. So even if we do get a breakout, I do expect the first breakout to be a fake out and to retrace back and continue ranging. That is what happens most of the time. So usually the first large breakout from a range is a fake out to take out most traders. Then what I like to do after the fake out, so after we fake out, usually we range and then we maybe reverse down and then we start a nice downtrend, for example. And that is when the real move appears itself. Again, it's all about grabbing the liquidity, stopping out most people, and then choosing a direction.
Sure. So with where we're currently at, you'd be more inclined to say this chart is choppy, it's indecisive. If anything, if you had to place a trade, you'd be more on the short side until something proves itself. Is that right?
Okay, if I had to place a trade,
You had to.
If I had to. Okay, let me see.
They do this, by the way, before you answer, Marco. I listen to a lot of different news networks. That's where I keep up to date with a lot of fundamentals and stuff. And what I love about this one show that I watch on CNBC is at the end of their show, they do a segment called Final Trades. And on Final Trades, they go around the table and everybody has to, not necessarily, you're not placing a trade, but you're stating very clearly like the most pressing, if you had to, set up right now, what would you do? And I love that segment because it's such an interesting, just to hear people kind of tackle such a difficult question, because clearly all of us are like, there's some stuff that could be setting up, but it's not quite ready. I love the idea of putting ourselves on the spot like that.
Yeah, cool. I have an idea about it.
Okay.
So on the lower scale, I would see this as being in a large range, right? So I would see this upper liquidity as being a major rejection area, and I would expect this breakout, which is now possibly going to do this, to fail. So I do expect this to fail and then continue ranging around, because, again, first breakouts, in my personal experience, usually fail around these areas above and below ranges. So we can actually also drop down to, let's say, the 15-minute. And there I would also see this being as a major resistance level. So I would not be buying, I would actually be selling at this point for a short-term trade idea to maybe get back into the center of this range, or maybe even to the bottom of the range. That's what I would be doing. So a sell.
Okay, fair enough. Thank you for the. I put you on the spot for a reason. I'm coming to Miko now. Miko, let's try it out. Trade of the day. If you had to place something, what would it be? I guess just wherever you're at. Again, I guess assuming you can say if it pulls back to, what's your trade setup of the day?
Okay, so not just dollar yen.
Not just dollar yen. Yes, anything you'd like.
Okay, so only about. Okay, trade for the day. Good question. I'll probably say pound yen long. I'm actually eyeing it up myself, actually. So nice coincidence. But yeah, I mean, I really like pound yen going forward. I think there's a lot of upside. I think the yen pair is starting to gain some strength again, and possibly could be seeing them come back to their relative highs, pound yen included. And recently, we just saw a nice break of structure, price breaking through 183 here. So this gives me a good sign that potentially that upwards move is on the cards, and we could be seeing pound yen and other yen pairs gain some strength. And I'm looking at this area here at 183, 100, we can call it. The market has been pretty consistent with these high lows, pushing to the upside. And I'm looking to see if we can place another one, retesting 183. We're not too far away from that level as well. So I do think there's a good chance we'll probably see some more upside. I'm looking at this massive wick to the downside from last week as possibly the next high low, similar to what we had over here. Massive moves to the downside, and then we've got the price pushing up, create some new highs. Possibly could be seeing a repeat of that situation and price moving up. Likewise with the other yen pairs. But in terms of opportunity, I'll probably say pound yen probably looks the best out of all the other yen pairs in terms of an immediate setup. So yeah, I'll probably say keep an eye on pound yen longs. And I mean, depending how far you want to take the trade, possibly back to the highs, but there's other highs here you could look to target as well. But yeah, I'll probably say pound yen longs.
Okay, cool. Miko, thank you for that. So pound yen, bullish setups. Marco, trade of the day. I know I put you on the spot with dollar yen, but you can choose anything. What would your trade of the day be if you had to do something?
Cool. So EU. EU would be my
Okay.
trade of the day. If I had to place a trade right now, I'll do a market sell, and I would put my stops above this. So basically, after these ascending channels, usually what happens, especially with this bearish candle, a nice downtrend occurs. So that would be my main trade idea for today. Rest of the pairs just do not look good. What about you, Nick? What would you do?
Okay, good. Awesome. So we've got so far, let's recap. We got pound yen longs, we've got euro dollar bear subs, which I do really agree. And I'm gonna pick something else just not to piggyback off you. I think for me, if I had to place a trade today, I'm watching dollar yen for breakouts. So again, I think we have a good shot at possibly retesting these highs around 150. And despite the mixed CPI number, again, core and headline kind of differing in their biases, I think dollar strength against the Japanese yen specifically could continue higher. As again, the story remains pretty divergent between the Bank of Japan and the Federal Reserve. So I like the dollar yen potential bullish setups on a break or any sort of retest into this area going into the remainder of this week and possibly into next week. Now, this is also finally last thing. What I will say is another. So I would be looking for a breakout retest. Like I said, I'm kind of cheating on my own quiz question here. So I'm not saying like I would buy it in market order right now, but I would break the retest entry. I'll add one more thing to my dollar yen idea is that, yields have been on the rise recently. And there has been a little bit of a blip to the downside in yields, people going into treasuries, possibly as a risk off move in response to the Israel situation. That's also been a little bit of what the bid on gold has been as well. So that's a little bit of a tough call to try and make, but dollar yen bullish setups would be probably where I'm at personally. So yeah, I think we should do that more often. That's kind of fun, just to be a little bit forced into a situation where you have to make a decision. So we got pound yen bullish, dollar yen bullish, and euro dollar shorts. So great. Thank you guys both for joining me on the show. Before we let you guys go, we've just dropped the links to Miko and Marco and their YouTube channels respectively. If you guys would like more content from them, they put out great stuff. They're great traders to have on the show each week, and we're thankful that they help to make the A1 Trading Show what it is. So Miko and Marco, thank you guys both for coming on, and we'll see you guys next week.
Thank you.
See you next week.
See you guys.
See ya.
And again, everybody, make sure to go subscribe to Miko and Marco. We always want to throw some love to our guests. It does just help to, the more people we bring on and we return the favor and refer more people to check them out. We're trying to build a network of traders here. So we've got Frank. I know, again, with the CPI number coming out, a little bit mixed today. We've got Frank on the call here. He's going to be joining us for a moment. So we'll go ahead and bring him in and say hey to Frank. Hey, Frank.
Hey, how's it going?
It's going pretty good. Inflation came out. CPI headline hotter than expected, but core slooped lower to 4.1% year over year from the expected 4.3. What are your thoughts?
It's kind of the same thing as yesterday, and it also kind of worked out the way I thought it was going to be, with higher than expected but lower than last time. So, 0.4 versus the 0.3 expectations, but last month was 0.6%. So I guess overall kind of a decline in inflation. So still kind of that mixed sentiment. I don't really know exactly where it's going to go, but the markets are still not having a heavy reaction yet. The New York session hasn't opened yet, but we'll see that increased volatility in like 30 minutes or so. But so I'm looking at gold here testing this 1880s level where I thought, okay, it could come up and then this could be a potential short opportunity. But a part of me doesn't want to short right now because, the markets have been going up, gold's been going up, yields dipped under 5%. Not today, they're back above, but it's just this back and forth between risk on and risk off, and which one are we gonna focus on. The Fed's meeting minutes was kind of the same thing. They want higher jobs. They want a healthy labor market. Wage growth is slowing. They like that. Inflation is still their number one goal. Nothing's really different there. In terms of long or short, I don't know. I might be looking for longs if it breaks this level here at the 1880s. And then also on the indices, I'm going to look at the S&P again. I trailed out yesterday, so we can ignore this right now.
Oh, so you're all out of you're all out of your S&P longs.
Yeah.
Awesome.
So today's kind of, if this closes like this looks kind of bearish. But we were talking about a test up here at the trend line. We'll just have to see. I'm going to be looking at like the 4 hour, 1 hour, see if there's any promising candles there. But yeah, I'm not really that bearish on indices anymore, since I've been buying them, obviously. But yeah, I don't really think that this is a major indicator because, we saw lower than previous. Core stayed the same. I don't know.
Frank,
It's
I
a
gotta
lot
show you
to.
something so cool. While you said that, I went to go check the EDGEFINDER scoring, and if we could switch over to my screen, this is just a moment where I'm proud of us because look at this. The S&P 500 no longer there because core was factored in properly to the algorithm that we wrote. So virtual high five, because that is kind of awesome considering the fact that we got the numbers already in and the EDGEFINDER has already done the computations behind the scenes, automatically sourcing that the core number was not incredibly damning for the S&P 500. And again, core is what many investors are looking for. They're looking for the core number to tick lower because inflation headline can be heavily impacted by very volatile areas of the market like energy and food, which of course is still important, but that core number ticking lower has been the struggle. So, I mentioned this right as the number came out. Gold, I definitely hear you. I'm not like in an angst to short gold right now. I think that if there is a short to be taken, if dollar bullishness can coexist with S&P 500 bullishness, that's another side of the story. But if I am going to be short biased on gold, it's going to be at that 61.8, the 1895, stops above the high, and very willing to switch biases if things change. But going over to the indices, again, that was kind of one of the coolest moments ever, just to see the algorithm computing automatically for us that core being a win today for the indices has already and automatically been factored into the scoring system of the EDGEFINDER. That is so cool to have it. Somebody in the chat, Frank, this is cool. The EDGEmentals. That is amazing. I've never thought of that.
Exactly.
EDGEFINDER fundamentals, the EDGEmentals.
Even NAS is at a bullish score right now. So the indices have flipped from very bearish to a weaker bearish, and then to neutral, and US 30's at neutral, and NASDAQ's at a buy or bullish. So that was
because we started trending well. The NASDAQ leads the market right now in terms of bullish strength. The COT data seems to be giving us a +1. Retail short biased on it. Seasonally, we're entering into a good period. Again, you give me half a reason to go long the NASDAQ on pullbacks and I will do it. But this is a nice flux of reasons. So inflationary numbers were not necessarily a win, but this is coming off of a -3 score on the EDGEFINDER that we had previously, Frank. I mean, that's a nice improvement due to that core inflation statistic showing properly some signs of continued cooling. And at some point, I think, Frank, you have to kind of scroll out on this whole situation, zoom out, and you have to say, we're at like 9% inflation and a Federal Reserve that had no end in sight with rate hikes. And now you don't have that. You have a story where the economy is staying strong. Recession fears are subsiding for the most part. There's still possibilities of recessions, but they're much less likely. You have a Federal Reserve who's not hiking at a rapid pace anymore, and you're seeing inflation trend overall to the downside. To me, that keeps me indices bullish. And again, I really like, just to brag on you for a second. You mentioned earlier you closed out of your S&P 500 trade. If it was me that had taken an S&P 500 trade, everyone in this room knows I wouldn't have shut up about it for like 15 minutes. So you're modest, more modest than I. Frank had a wonderful trade in the S&P 500. He's called that bullishness very well. And you ended up trailing that out for about 1,039 pips, which was a fantastic trade there. So congrats on that trade, Frank. And again, I think we might be starting to see a more bullish picture coming in for the indices.
Yeah, and the same kind of scenario for UJ. I was looking at the weekly chart, and I know I've been talking about it, but I'm still hovering. I'm in drawdown right now, but yeah, I was looking at last week's candle, looked like buyer's exhaustion, but this week starting to turn around, so might get stopped out. We'll see. But yeah, I think what this depends on is the yields, and if the yields can continue this trend lower, even though they've been on a hot streak recently, then we'll probably see some weakness in the dollar yen pair. But yeah, I'm just looking at, I feel like a retail trader almost. Like I was going against the trend on indices, going against the trend on UJ. We'll see if it works though.
Well, I think you've been, in some ways on the indices, you've been going against retail traders, I think, right? Let me look at retail sentiment. That's a good thing. I'm curious. I'll pull this up. I'll take a look at indices for just a second. US 30, the Dow, retail traders 56%. I think, Frank, you're actually going against. Oh, yeah, you're going against retail traders with that S&P long.
It wasn't like that for the past several days. They were pretty bullish on the S&P and all the indices. So I think just because of this run to the upside in the past week or so, they're looking at another reversal trade, but yeah, I don't know.
Yeah, really interesting to keep an eye on it. Frank, I don't want to keep you any longer. This is, again, kind of an exciting day for me. I think the most exciting thing for me, genuinely, out of the entire day was the fact that the EDGEFINDER spotted core, did the calculation, computed, and found new setups based on that for us. That, I mean, guys, Frank and I have been doing this stuff together for like years. It all started a long time ago in Frank's basement when we were looking at Snapchat and its IPO, and it IPO'd. It didn't turn out too well though.
No, it didn't. Yeah, but that was our introduction.
I remember, Frank, when this was like our first thing we seriously watched together. Frank and I were like, on the stock side, we're like looking at 2017. We're like, what is going on? The IPO is coming out next March or whatever. And it did come out, and it just immediately sank lower and lower for a long time. Then it went all the way up during all the 2020, 21 craze. It went up to $80 a share, which is crazy to think. But anyways, Frank and I have been doing this together for a long time. It's been a really fun journey, and building the EDGEFINDER has been probably the best kind of output or result of our work in this stuff all this time. So Frank, I'll let you go. Thanks for coming on the show and sharing some insights with us on this pretty interesting CPI day.
Yeah, thanks for having me.
See ya. Always good to have Frank come on. I say it like that, like, oh, good to have Frank come on, as if he's not literally outside of my door in the main office area. We have a studio office here in Atlanta, Georgia. That is where we build as a team the software tools that you guys see on the show. At the core, I'm a trader. Frank is a trader, but on our business side, we are software developers. We build tools together for traders to find more insights in the markets. I definitely have some trades that I'm looking to act on today. If I take any of those trades, or when I take those trades, you guys will see them inside of our Discord. You'll also be able to see Frank's. And I mentioned this earlier, but I'll reiterate in case you missed it. We are doing, for this stream only, 45% off of our memberships inside of the Discord community. If you would like access to those, to that discounted 45% off on our trade alerts, You can get them by messaging us in the chat right now. Click this link. You can see this link. Send us a direct message. That'll connect you to a real person on my staff. Here at A1 Trading, we have a couple different representatives who can hook you up with a membership to get you access to trade alerts. If you have questions about the EDGEFINDER, if you'd like our software, you can also pick a copy up there. Just message us and someone from our team will help you out. So message us, get that 45% off sale before it ends, and we will see you guys back on the next stream. And see some of you guys inside of the Discord in just a minute. See you guys.
Before you disappear, one lucky person who joins the free Discord will win an upgrade to the VIP Discord for the rest of your mortal life. The VIP Discord features Nick and Frank's trade updates and analysis,
live webinars, chat rooms with traders from all around the world, along with so much more.
Click the link being dropped in the chat to secure your spot in the free Discord, and maybe you'll be our upgrade winner. We're dying to meet you.